ratio and exchange rate, what is it exactly? Okay. So this type of questions, it would be asked by the interviews also. So you can explain according to your knowledge. That's
Okay. Okay, carry on.
so this is the foreign currency revaluation configurations. Define accounting principles. Let me do the first explanations about the accounting entries, like how entries will going on if loan taken from the foreign bank. Okay. So here is accounting entries. Cashier bank loan account account debited to foreign currency loan account. If exchange loss will be happening, so exchange loss account debited to term loan account credited. If exchange gain was there, so term loan account debited to exchange gain account credited. So here is we can see that unrealized entry. What is that? If loss was happening, so exchange loss was debited to balance sheet adjustment account credited. So what is here is one thing also, realized entries. So exchange loss account debited to original reconciliation account credited. So here is the one question comes first. What is balance sheet adjustment? So basically it is used for the reporting purposes and we don't post the entry. That's why the SAP used it at balance adjustment instead of the original reconciliation account. And what is original reconciliation account? Excuse me. In vendor or a customer master, we can assign reconciliation account. This value should be updated there, and this is just a realized part. So we are doing when we are doing the actual payment. So these type of interest it's just happening in the realized entry.
Okay, just please be wait a moment. So, how entries will be going on means once FC revaluation is done at user level by month ending, we will get different kind of entries. So, for example, in what and all the scenarios we are going to run FC revaluation means mainly wherever foreign currency transactions happen. So, each and every transaction wise, we have to run the report, right? So, in which areas we will done foreign currency transaction means mainly two things. One is open item management and another one is account balances. Account balance is nothing but GL account. Like as per our requirement, we will take loans some foreign banks. So again, we have to pay amount in the form of EMI in every month. So loan taken amount, for example, you can take loan 10,000. So we will fix as a 10 months for a loan tenure. So every month loan amount is $1,000. So we have to pay. But due to the foreign currency fluctuations, we have to pay 1,000 into 80 means 80,000 rupees. So if dollar price is increased, we have to pay 85. If dollar price is decreased, we have to pay 75,000. Like that, in foreign currency term loan scenario, we have to run the revaluation and when account open item means vendor and customer. Same way as part of business, we have purchases with foreign customers, we have a sale with foreign customers. In between, we are running the foreign currency. So these purpose we can run the foreign currency. And once the FC run, how entries will be going on means simply loan taken from bank. So whenever we will take the loan, either it will cash or bank, mostly bank. So bank means our bank account comes under the debit and FC term loan account comes under the credit. This is the loan, normal transaction. For example, not only term loan, in local balance banks also, if you can take any loan, so what is the entry? Our bank account or cash account debit to local HDFC or ICICI bank account credit to. It means a local HDFC or ICICI bank loan account credit to. That is normal entry, normal account terminology. right? And coming to FC revaluation entry point of view, you blindly keep in your mind, wherever exchange loss comes, exchange loss kept in always debit side. Simply, for example, here you can see foreign currency term loan point of view, exchange loss comes under the debit. And go down, unrealized point of view also, exchange loss comes under the debit. And realized point of view also, exchange loss comes under the debit. So always wherever exchange loss came, we will kept in exchange loss GL account in the debit side only. And other than difference is, if exchange loss debit and term loan point of view, term loan account credit. If exchange loss if exchange gain comes under the term loan, the entry is so term loan account debit to exchange gain account credit to. Like this is the entries. And coming to unrealized point of view, we already discussed unrealized means that is nothing but simply reporting purpose only we can use. Either the payment is not completed particular invoices. So here how entries will come means simply unrealized exchange loss account debit to and balance sheet adjustment account credit to. So here balance sheet adjustment account it will be introduced in SAP because these unrealized payment purpose if you want to run the report we can use a balance sheet adjustment account. Later next month first again we have to reverse the transaction then automatically the balance sheet adjustment account it will be nullified. So that we can use the balance sheet adjustment account it is the new it is GL account we have to create it. Same way, unrealized point of view, if exchange loss comes, always debit. If and balance sheet adjustment account credit. This is the last scenario. Coming to Sheetal, just move on your server. Sorry, move on your cursor. Uh, and unrealized point of view, if you are getting gain, balance sheet adjustment account debit to and exchange loss account to credit to. Okay, exchange loss account credit to. And coming to realization entry, realization means invoices are generated, payment also happened. So when we run the FC system, it will generate two kind of report, like payment completed means realized, payment not completed, unrealized. So unrealized, we have an idea, just discussed. And realized point of view, I already told, whenever you are getting the last GL account always completely comes in debit side. But thing is, realized point of view balance sheet adjustment came. Unrealized point of view balance sheet adjustment came. Realized point of view original reconciliation account. Original reconciliation account is nothing but as part of our requirement, we will create a couple of reconciliation account, vendor reconciliation account, customer reconciliation account, and especially as per business requirement, domestic vendor reconciliation, one time foreign currency vendor reconciliation account like that. Domestic customer reconciliation account, foreign customer reconciliation account, one-time customer reconciliation account, like that. How many reconciliation account we have? Based on the GL nature wise, based on the open item nature wise, all the reconciliation account, GL accounts, it will be affected in the time of FC evaluation. This is the things, right, Sheetal? You have a good idea, but just little bit confusion while trying to explain. One more time,
Definitely.
try to explain it.
Yeah, yeah. For the balance sheet adjustment and original reconciliation account. Hello.
Yes, yes. Hello.
Yes, yes.
Carry on. Carry on.
Yeah, yeah. So I need to explain both things once again, right?
Same thing. Entries point of view, again, you have to explain one more time.
Okay, so for the unrealized entry, for the loss purpose was happened. So exchange loss debited to balance sheet adjustment account. Here are we can see that balance sheet adjustment account gain and exchange gain account credited more. So why is it happening? Why? Because balance sheet adjustment only for the reporting purpose. So we don't post the entry, but that is why SAP used an adjustment for the balance sheet instead of original reconciliation account. So here are realized entries there. Exchange loss debited to original reconciliation account. Okay, and one more thing here is it is a reverse part or gain original reconciliation account debited to exchange gain account here as mentioned. So what is original reconciliation account? So in vendor or customer master data, we can assign the reconciliation for this value, which should be updated there. So this is a just realized part. So we are when we are doing the actual payment. That is why we are using the original reconciliation account.
Okay, just move for further steps.
Okay. So here we can see that define accounting principles and this is the configuration parts also for the foreign currency revaluation. Let me explain what is defined accounting principles. So in SAP, accounting principles like IFRS, local GAAP. So it is the define the sets of valuation rules used during the month and foreign currency valuation. So why is it used? Like IFRS and the local GAAP. So basically, it is supported for the parallel account and it would be applied for the valuation methods in the same company code. So whether exchange rate is exchange gain or loss is realized or unrealized. So, what first question is what is GAAP? So, it is used in the US basis. It stands for Generally Accepted Accounting Principles, and IFR it stands for International Financial Reporting Standards. It is used for the global standards. IND as Indian Accounting Standards, it is used only in India. HGB, it is used in the German local accounting standards. So, sir, can we start the configuration? So I need to explain
Yes,
all
yes,
those things
go
and
for
after
SAP.
that we can do the configuration.
No, go for SAP. Same time we can explain SAP and theoretical also.
So firstly, we need to do that the configuration GB for the exchange rate type. No? Hello,
Okay, okay. Just explain these five steps,
am I
why we can
audible, sir?
use. Yes, just explain these five steps, why we can use these five steps. Then let's go for SAP.
Okay. Uh, yeah, sure.
So, okay, give a moment. So I just explained. So here define accounting principles. So define accounting principles means here we just fix a text field only. So here IFRS, US GAAP, Indian accounting principle, like company having how many countries running the business. Based on that, we have to create the accounting principles. So in our scenario, we just create a one accounting principle. For example, in India wise, we have to run the report, then we have to create a one accounting principle also. And US point of view also, if you want to run the report, you have to create one more accounting principle also. And global wise, like IFRS, so group wise reporting purpose, we have to use one more accounting principle also. How many accounting principles you have to use? Based on that, we can create a accounting principle that is a text field, first field. With the help of this path, we can reach and create the text fields and assignment of accounting principles to leading ledger. So, for example, IFRS accounting principle, we have to assign leading ledger 0L. Same way, US GAAP also you have to assign leading ledger and ICA Indian accounting principles whatever we have to assign the leading ledger. So here whatever we created the accounting principles everything we have to assign leading ledgers. So whenever you post any kind of transaction everything it will be display under the leading ledger only. Later based on the accounting principles it will converted and generate the report as per local requirement. And coming to valuation method. So valuation method means in this field, uh, okay, you just open the system and we'll explain it.
So sure.
Financial accounting new,
Definitely.
not
So wait. Yeah.
in user it will comes to new wrong. Capital letters is correct or not?
Okay.
SPRO, financial accounting, global settings,
Yeah.
ledgers, financial
Yes. Yes.
accounting,
Activate new general ledger account. No.
ledgers, parallel accounting,
This one, sir.
click on this one. No, that is not. Just go back. Financial accounting new, financial accounting global setting. Financial accounting new screen you have to go. Financial accounting new. Ledgers. Global settings new.
Yeah.
Ledgers. Parallel accounting. Define accounting principles. So here I just explain the screen only because end to end if you are processing it will take much more time. So you already created but in as per HANA but data is deleted. So once class is
Yes.
completed you can try to update entire end to end process. So here explained here this is a text field only accounting principles. Click on new entry.
Accounting principles. We can pick that new
Just
entry.
updating accounting principles. Whatever you have to update accounting principle, you just updated your company name, whatever. Otherwise, ICA, whatever you can do. Okay, you can update accounting principles for some actually your company name, you mention it. This is the text field. Okay, you just explain the screens only. Later we'll process because once end-to-end configuration, it will take 2 hours. Just
Okay.
explain.
So
This is the accounting principles screen. Here we want to create a just accounting principles text. This is also text field. Whatever based on our requirement, you have to create the text field and save it. Okay, just go back. Then again,
Uh,
just go
uh,
back. So whatever we can create at accounting principles, we have to assign to our leading ledgers. In down
yes.
also accounting principles, assign accounting principles to leading ledger. So here, whatever we have created accounting principles, we have to assign our leading ledger. Here you can see many of the people assign the accounting principles as per their required names and assign the 0L. So this is the second step. And just go back and valuation method.
OB59, can I do?
Uh,
Yeah. Open the path.
T code is there, you can go for that.
For the take or rise. Okay.
Just go back. Define valuation method. Financial accounting new. GL accounts. Financial accounting new.
GL.
Financial global settings new. Sorry. Just go back. Just one point. General ledger accounting.
Okay.
Financial accounting. GL accounts. Periodic processing.
Yeah.
And define valuation methods. Evaluate. Define valuation methods. Click on third one. Value.
Evaluate also. Okay. Yeah.
And valuation method. So here you can see this is also important. Valuation methods. Just go for Excel sheet. Okay, once click on new entry.
Okay. We can copy that things
Uh, uh,
also. No? So
New entry. Click on new entry. So here in valuation method, so this is a very important screen. How system it will be validate means here in valuation method we have to valuation method exchange loss. Just scroll down. This is not screen. Just go back.
go back.
Uh, Move and just close it. Okay, click on anyone. Valuation method 1080. Select this one, go to double click on that one. Okay. Just scroll down. This is the different financial. Okay, just go back once again. You already practiced or not?
I have practiced in the not to the path, but only T code I have used. Sorry for
Which
that.
T code you have to explain?
OB58.
Explain about valuation method. In valuation method, what and all the fields you have to update? Let me explain.
Uh, Basically, what can be configured in the valuation method? So valuation procedure like lowest value principle and strict value, lowest value and always valuate. Valuation of open items on balances like customers, vendors or GL accounts as per the requirement. Then posting parameters, whether to have to reverse the posting in the next period and whether to post the gain or loss separately. The document type used to gain for loss. Yeah,
Why we can use always evaluate?
sorry.
Why we can use the always evaluate checkbox? So here, instead of system, it will provide different checkbox, group vendors, group customers, GL valuation group, and restrict low value principles, revalue only. So these and all the fields, if you required client as per client requirement, separate only. If you want to require, then you have to activate checkbox. So, but in our scenario, we click on evaluate evaluation means entire all the scenarios happen, but system it will be generate the FC revaluation. So that We can select the always evaluate. And coming to document type, simply document type, why we can use the SA document means later FC revaluation completed, both debit and credit side also SA document relevant GLs only it will be updated. So that debit and credit, entire GL accounts only it will be updated. For example, exchange loss is also GL account, exchange gain also GL account, balance sheet adjustment also GL account, original reconciliation account also GL account. So that both sides GL accounts only it will come, so that we can select the SA document only. And exchange rate determination, here we can select the exchange rate for average rate. So select M. So like that, you have to explain this particular screen. At the time of interview, this screen, what and all the field checkbox is there, which checkbox if you can activate, what and all the changes happen. That in this way, you have to explain. Don't
Yeah.
read it.
Okay.
No,
Yeah, sure.
carry on.
Yeah. So again, come to the time dependent attributes, right?
Just go back. Okay, time dependent attributes, regional not required now. Just go back. One time only. Just go back. Again. So now valuation method is created. Wait. Valuation method is created. Then valuation area. So why we can use click on this valuation area. Execute. Click on execute valuation area.
Yes.
Go to the new entry. Okay. So
Valuation,
here why explain it.
yeah. So valuation actually what is that the valuation area? So it is an organizational unit. First, what level foreign currency valuation is carried out at the company code and client level. Okay, so that's why the we have used the valuation area. As per the company code level and client level and valuation method, what we have to update it before that. So we can do that the configuration once again here. And currency type, what should be the mentions like USD basis? So we can put inputs here. Yeah, and we have to save it and yeah, valuation area created.
Okay. See here valuation
Hello.
area. Va- Valuation area is nothing but in which area wise system it will be validate the FCD valuation. For example, company code currency wise, group currency wise. Group currency means IFRS. Group currency wise, if you want to run the evaluation, company code wise, if you want to run the evaluation, then we have a option. So for example, simply company code wise. So we just created one text, something AB, whatever, AB. Just AB, you can update company code and valuation method. So previously we created some valuation method. That valuation method we have to update here. Uh, and currency type. So currency type means which currency, either group currency or company code currency. 10 means company code currency. 11, 30 means group currency. So here, these and all fields available like group currency wise, hard currency wise, index based wise, global currency wise. In which currency wise system it will run the FC revaluation. Here only we can fix it. This is the field. Okay, just go back. So later, go to the Excel sheets. Okay, first accounting principles is completed, then assignment of accounting principles to leading ledger, then valuation method, what and all the fields you have to update. Then valuation area. So in which currency you have to run the report, we can use the valuation area. Later, assign valuation area to accounting principles. It means here in valuation area, valuation method also added. And finally, valuation area to accounting principle. Final key step is valuation area. In this valuation area, accounting principles we have to map. The finally user level, user run the report. You just check, enter valuation area name and company code and date and you run the report. That is the final report. Based on valuation area, wise system will run the report. So this valuation run report, we have to do some basic configurations like just scroll down, required GL accounts. Explain it, what and all the GL
Yes.
accounts required.
So it is required for the GL accounts, the GL name like FC or foreign currency term loan account. So it is secured loans first. It comes to the under accounts group number series like 100900 10099, uh, and it is the current account. Sorry, it is the current in the USD basis. Then after it, we have created a GL account, cash, otherwise bank as well, and like the number series were available 100705. This is the account group we have created in the charts of account before that. And after that, it comes under the current assets for the cash, otherwise bank accounts for the bank accounts. Uh, After that, we need to be create the exchange gain. Exchange and as per we have already discussed what is that exactly. The number series was there 100909. So it is comes under the other income like 1009 in double zero to the 100999. Then after that we have go through the we will have to create the exchange laws. This is also it
Then
comes
just
under in the
sorry, you can carry on.
comes under the administration expenses. The number series was there 101 400 to 101 499. We have created again in the charts of account before that in the accounts group also. And after it, we need to be create the balance sheet adjustment account. It comes under the current liabilities and provisions. Inner line items 012 should be mentioned and field status should be mentioned G001. So yeah, and exchange rates go through the again exchange rates the T code we have used OB08 and update exchange rate for the month entry. That's it. So,
Go to OBA1 screen, slash and go slash and OBA1. Exchange rate different screen. Okay. Here, this is the main integration between whatever we created all the GL accounts. We have to assign here. Then only system it will run the entries. So here in